Welcome to Informed Investor. Hindustan Unilever, a name synonymous with consumer goods in India, is currently making headlines for several significant developments. Being the largest packaged consumer goods maker in the country, HUL serves as an indicator for domestic consumption. But wait, why are we talking about HUL today? So HUL has been making headlines with its recent moves of acquiring a 90% stake in the premium beauty brand Minimalist, thereby boosting its beauty and well-being portfolio, and secondly, demerging its ice cream business Kwality Walls into an independent listed entity. And lastly, the divestment in Pureit. So stay tuned till the very end to know it all as we list out all the details along with the Q3 results and the road ahead for the FMCG sector as a whole. But first, let's take a step back and understand HUL's business. Hindustan Unilever Limited, or HUL, is India's largest and most diversified FMCG company and a subsidiary of the Unilever Group, one of the world's largest consumer goods companies. With over 50 plus brands spanning 16 FMCG categories, HUL's products are an integral part of the daily lives of millions of consumers across the country. Its portfolio includes popular household and personal care products like soaps, detergents, shampoos, skincare products, and cosmetics. Some of its most well-known brands include Lux, Lifebuoy, Dove, Lakme, Sunsilk, and many more, covering a wide range of sectors such as food, beverages, home care, health, and beauty. Now, when we look at HUL's revenue distribution, the company has a diverse portfolio. Home care, which includes cleaning and hygiene products, is leading segment contributing 37% of the total revenue. Beauty and well-being, which includes personal care and cosmetics, follows closely at 22%. Foods contribute 24% to the revenue pie. Personal care consists of skin care, hair care, and oral care accounts for 15%. The remaining 2% come from other categories like exports and consignment sales. This diversified structure allows HUL to tap into multiple consumer needs. Now let's delve deeper to explore and understand the latest developments. In its board meeting, HUL announced that it would acquire 90.5% of Minimalist, a premium beauty startup known for its actives-led skincare products, for approximately 2,955 crores. The balance 9.5% will be acquired from the founders in the 2 years as per terms set out in the transaction documents. Now, just to give you a brief, Minimalist is a popular direct-to-consumer brand known for its skincare products. The company's products appeal to the youth and caters to a younger, more digital-savvy audience. The best part about Minimalist is that it has an annual revenue rate of 500 plus crores and has been profitable since inception. Now, with this deal, it aims to enhance HUL's presence in India's rapidly growing premium skincare market, complementing its existing portfolio that includes renowned brands like Dove and Lakme, thereby strengthening their e-commerce and mass-stage presence. This transaction is all set to complete by the fourth quarter of fiscal year 25, subject to regulatory approvals and customary closing conditions. The second significant development is the announcement to demerge its ice cream business, Kwality Walls, into a separate listed entity named Kwality Walls India Limited. As you know, Kwality Walls is a multinational frozen desserts brand owned by HUL, offering around 68 products under brands like Cornetto, Magnum, Feast, and Slow Churn. Now, what about the scheme of arrangement? So basically, post demerger, shareholders will receive one share of Kwality Walls for each share they hold in HUL. This demerger is designed to unlock value for shareholders and provide Kwality Walls with greater operational flexibility to pursue growth strategies tailored to the unique dynamics of the ice cream market. Now, moving on, recently HUL also announced its third quarter results for fiscal year 25 and it revealed a mixed performance. The company reported a mere 2% increase in sales to 15,195 crore in the third quarter compared to the 14,928 crore a year earlier. EBITDA margin came in at 23.5%, a slight decrease of 20 basis points compared to the previous year. Now, when we look at the bottom line, net profit surged 19% year on year to 3,001 crore. But if you look closely, there was a one-time gain of 509 crore from the divestment of Pureit, water purifier business, to A.O. Smith. Now, what about the current status of the FMCG sector and the management guidance? If you see the image, there is a clear trend that shows subdued consumption. The volume growth represented by the blue line is slightly declining, indicating slower consumer spending. Rural markets, represented by the green line, shows moderate recovery, while urban markets, as in the purple line, remains flat, reflecting softer urban spending. Notably, HUL derives about 60% of its sales from the urban areas. Another interesting observation was that small packets are outselling the big ones. This probably has a lot to do with people being mindful of their budgets. And finally, something that's happening for a while now is still true: the concept of premiumization. People are willing to spend more on better quality stuff. Even though things are a bit tight, they still want that premium touch. Now moving on, Rohit Java, CEO and MD, highlighted HUL's resilience amid subdued FMCG demand driven by rural recovery and investments in brand superiority. The acquisition of Minimalist strengthens its beauty and well-being portfolio, aligning with its premiumization strategy. While macro factors such as high food inflation or real wage growth impact urban consumption, HUL remains confident in India's FMCG growth potential and its ability to sustain competitive performance. Now to conclude, Hindustan Unilever is navigating through transformative changes that not only enhance its portfolio but also reflect broader trends within the FMCG landscape. As it continues to adapt and innovate, it will be interesting to watch how these developments shape the future trajectory of Hindustan Unilever. Now having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.